Let's talk about a building. It's a pretty modest five-story building in the Cayman Islands called Ugland House. But what if I told you this one building holds a secret so big it involves trillions of dollars and some of the most powerful people on the planet? It's a secret that even caught the attention of a US president.
Yep, that's what former US President Barack Obama called the whole situation surrounding this building. The biggest tax scam in the world. That's a pretty bold statement, right? It hints at this massive global system that's just operating under the radar of the regular economy. So, what is actually going on here?
Get this, at one point, this single, unassuming building was the registered office for 20,000 different companies. Now, either that's the most crowded office building in history, or, as a lot of people have suggested, it's a key piece of a system designed for one main purpose: to avoid paying taxes.
So today, we are pulling back the curtain on that very system. We're going to dive into the world of offshore banking, a world where trillions of dollars just seem to vanish into thin air. And here's the crazy part. It's all completely legal.
So, just how much money are we talking about here? Well, experts estimate that over $10 trillion is held in offshore financial centers around the globe. To put that into perspective for you, that is more than the entire economy of Japan, just sitting quietly in places most of us couldn't even point to on a map.
And look, this isn't some tiny fraction of an obscure financial metric. We're talking about an estimated 8 to 10% of the world's total household financial wealth. It's almost like there's this huge parallel financial universe operating right alongside our own. And when that much wealth is outside the standard tax system, it means hundreds of billions in lost revenue for public services every single year.
So, what even is offshore banking? At its heart, it's actually surprisingly simple. It just means putting your money in a country where the financial rules are different and, for you, much, much more favorable. These places have basically turned financial secrecy and low taxes into a booming industry. So, what makes these places so irresistible? Well, they compete for wealthy clients by offering this perfect storm of three things: incredibly low or even zero taxes, super strict privacy laws that keep names off of public records, and really loose reporting systems that don't make you explain where every dollar came from. But to really get how this all works, you have to wrap your head around one crucial concept. It's a fundamental shift in how you think about money and ownership that makes this entire system possible. Here it is. This is the secret sauce. The ultra-wealthy structure their finances so they personally own almost nothing. Instead, their companies, their trusts, and their foundations own everything. That simple distinction, that's the key that unlocks the entire offshore world. Let me show you how this plays out. Okay, meet James. He's a CEO, makes $1 million salary, his income is reported, and bam, he loses nearly half of it to taxes before he even sees a dime. Now, meet Mike. He also makes $1 million, but it's through a trust in the Cayman Islands that owns a company. Mike technically doesn't earn a salary, he gets to control when and how he gets paid, which lets him minimize his tax bill. James's money is out in the open, Mike's is hidden in plain sight.
Okay, at this point you're probably thinking, wait a second, is any of this even legal? And the answer is, well, it's complicated. It all comes down to the difference between two very important words.
First up, you've got tax evasion. This is what most of us think of, right? Getting paid in cash under the table and not reporting it. That is absolutely illegal. It's a crime, plain and simple. But then there's tax avoidance. This is using the existing rules and laws to legally lower your tax bill. It's like writing off a business expense. Offshore banking is just the big league version of this. It's using international laws, complex loopholes, and the smartest lawyers on earth to legally sidestep most of the tax bill. And hey, if you're finding this interesting, we'd really appreciate it if you could like, share, and subscribe so you won't miss any of our next explainers. All right, let's look at one of the most famous examples of corporate tax avoidance in history. We're talking about Apple, a company that came up with a strategy so clever and so effective, it got the attention of the entire European Union. So here's how they pulled it off. First, Apple set up companies in Ireland to collect profits from all its sales outside the US. Now, under American law back then, companies incorporated abroad weren't automatically hit with US taxes, as long as the cash stayed offshore. So step one, complete. Now, here's the truly genius part. Irish tax law said a company was only taxed in Ireland if it was managed and controlled from Ireland. And since Apple was managing these Irish companies from its headquarters in the US, they weren't taxed by Ireland either.
They basically created stateless companies that legally existed in this gray zone, taxed by no one.
And the result of all this? At one point, this strategy dropped Apple's effective tax rate on its foreign profits to an unbelievable 0.005%. Let me say that again, 0.005%. That's like paying just $50 in tax for every $1 million in profit. It's staggering. Well, eventually the European Union caught on and stepped in. After a legal battle that dragged on for over a decade, Apple was ultimately ordered to pay back $14 billion in back taxes. And you can bet those loopholes they used have since been closed. So how does a person replicate this own-nothing strategy on an individual level? Well, it's a playbook used by the ultra-wealthy all over the world, and you can really break it down into a few key steps. Okay, step 1, you create a shell company in a tax haven, say the British Virgin Islands. This is just a legal entity that exists only on paper. Step 2, that company, not you, legally owns all your assets, your mansion, your yacht, your stock portfolio, you name it. And step 3, for that final bulletproof layer of separation, the company itself is owned by a trust, probably in yet another country. You're just the beneficiary. Your name is nowhere to be found. When you zoom out, you start to realize this isn't just a few clever people finding loopholes. This is a global system. But it brings up one last big question. If your name isn't on anything, how do you actually spend all that money? You know, massive leaks like the Panama and Pandora Papers have shown us that world leaders, presidents, even royalty use these exact same structures. The key to getting the cash out is a strategy called buy, borrow, die. Instead of selling your assets and paying taxes, you use your offshore billions as collateral to take out huge, low-interest loans. You live off that borrowed money, tax-free, and when you die, the assets are sold to pay back the loan, and whatever is left passes on to your heirs, often avoiding estate taxes too. Which brings us to our final question. We've just walked through a system of shell companies, stateless profits, and tax-free borrowing that's used by the world's most powerful corporations and individuals. So you have to ask yourself, is this a flaw in the global financial system that needs to be fixed? Or is it a feature working exactly as it was designed to?